Okay, so let's start the session now. So good morning to everyone. This is Mohammed Samid. I'll be your host and moderator for the day. And in our finance panel today, we have ourselves Mr. Rupesh Goel and Mr. Mahendra Kumar and Soni. So Mr. Rupesh Goel is the managing director and head of credit in Indian Silicon Valley Bank, and Mr. Mahendra Kumar is the chief financial officer in KB Exports. So Mr. Rupesh, shall we start with you?
Yeah, please. Happy to.
Yeah. So, what are the key challenges faced by traditional banks in adapting to the digital age, and how does Silicon Valley Bank stay agile and innovative in navigating these challenges?
Perfect. Thank you, Samir, and welcome everyone. I'm really delighted to be part of the South India Business Week and also as a part of this panel, along with my co-panelist Mahendra. Thank you for that. And Samir, in terms of your question, I potentially will sort of focus predominantly from the overall banking sector rather than just Silicon Valley Bank, right? Because it potentially will help the audience if we talk more from a general banking and overall banking perspective. And if I were to sort of think of it in blocks of key themes, right? So I think one of the key themes is the whole digital banking, and I don't mean in a very light way, but also so one is the front ending, right, which is your apps and stuff like that, or internet, or mobile and all of that. The other is the back end of it, which is very important for the banks, and that is quite a challenge for most of the traditional banks in terms of building APIs, in terms of having sort of direct connectivity in terms of their digital banking platforms and their traditional banking platforms. So digital banking is one theme. The other is potentially fintech startups. Of course, these startups are coming up with fresh ideas and looking at a problem from a different perspective and a different angle. So those two, and then along with it, one is on the blockchain or crypto, but blockchain predominantly. Again, startups and some of the other institutions are sort of looking at blockchain as a technology to sort of be disruptive in the market, come up with an entirely different proposition. The other couple of other stuff, if I were to state, is on sort of on the wealth management part of it, which is instead of depending on, say, an advisor to advise, advice is based on AI and a system based, or what we call robo advisors in the industry, right? So there is a lot of the automated investment advice, right? But that is something which a lot of traditional banks are not really good at. A lot of the new age banks and new age startups are sort of taking first steps on that. And the last bit on this is the regulatory change. This is huge. With all of the changes happening in the industry, this is changing the landscape. And here I would say not just traditional banks, but also the fintechs, right? We've seen the recent announcement by RBI on a couple of things, right, with a Paytm bank, or even on the payment, right, where they provide credit card services to business area, right? So those impact, and there are regular impacts, both in terms of what regulators come up with across the world. Yeah, so that requires banks, institutions to change. Also, on the other side, posing challenge to the regulators to sort of make sure that the environment remain conducive to the retail customers, investors, and also from an overall financial inclusion perspective. I'll keep my answer brief, Sumit, and we can delve into this as we go through.
So Ms. Kadambari Rao ma'am has joined us. Ma'am, welcome.
Thank you so much.
Yeah, so Ms. Kadambari Rao is an author and startups for disruption.
Yes, I've written a book, Startups and Disruption, that's based on, and was published by Stage last year, based on my about 25 years of experience in technology for financial services, so the UK, but even an Indian perspective as well. So yeah, that's what the book is about.
Yeah. So thank you, Rupesh Goel, for this answer. And Mr. Mahendra, if you can just ask you a question.
Sure.
Yeah, Mr. Mahendra, shall we go with you next?
Yeah, no problem.
Yeah. So in your opinion, what are the critical factors for businessmen in managing financial resilience and sustainability amidst economic uncertainties and market disruptions?
So, I would give four main pillars of this discussion. So, one is obviously the latest technology and the technological advancements which are happening in the industry. So, keeping ourselves updated with the latest trends is very critical because in any race, if you want to stay in the race and you want to grow as a business, then definitely you have to keep yourself updated. And if you're not updated, then obviously you will find yourself in a mess. So we know the example of Nokia. Obviously, it's a public platform, but yeah, we everyone of us has studied and we have seen the case studies that if we are not up to the mark with the technology, then a business will hamper very badly. So yeah, so I can give an example of my own company. So 2 or 3 years ago, we were not having any dedicated team who are working on analytics and AI based solutions, you can say. But as the business raise and as we are growing as a company, we know that without the help of the technology, we will not be able to grow in the same speed as we can grow. So now we have a team of 10 people dedicatedly working on analytics, and we are into a business of fresh fruits and vegetables where every minute is very precious. So there is a team who is continuously working on a lot of technological platforms. We are using tools like Tableau, Power BI, Python, and everything, which is basically reducing the timeline of manpower. So the same finance department who would have been taken like 3 days to create a report is now can create the same report in 30 minutes time because the data is digitalized, everything is available on fingertips. So obviously the technology is helping, and that is going to be one of the most important tool for any company and or any organization to grow. Apart from that, a lot of solutions from the bankers itself helping a lot. Again, 4 years 5 years down the line, we do have to do a lot of compliances like RBI compliances. Manually we have to submit a lot of requests to the bank, and then the bank would take 30-45 days to process the request. Now the same thing can happen on fingertips. So in India, when Yes Bank have started their RBI compliances online for the first time, so we were the first company from agriculture and export to be approached by Yes Bank to try their platform and to be the pilot in basically testing their servers. And we are really happy to be part of that solution creation. And now I think all the bankers has already moved on online subscription of these basically all the formalities and compliances. So yeah, the digital solutions by the banking is also helping us. And in terms of AI for like supply chain, your cloud availability, these are also helping. So these are some of the tools which will definitely help the companies to grow and uh, be at the same pace as the world is growing. So yeah, that would be my answer.
Yes, sir. Thank you very much. So, Miss Kadambari, ma'am. Yeah, ma'am.
Yes, tell me.
Yeah, ma'am. So, based on your expertise in startups and disruption, what are the key trends and disruptions reshaping the financial landscape, and how can business and financial institutes adapt to thrive in this era of change?
I think one of the biggest changes that we've been seeing for some time now is digital transformation. So it's really about looking at, and you look at it at two ends of the spectrum. So you have traditional industries where they want to sort of maintain their processes as they are. So there hasn't been a change in the way the business is delivered to the end customer, but in terms of the process. But how you reach your customer, how you can make the process more efficient, technology has come in to kind of change that in a big way. So examples like, for example, we've got companies like Bima and Lemonade in insurance, where you can now just actually buy a policy on your mobile through SMS, especially relevant when you're thinking about underpenetrated, underserved markets in poorer sort of economies. So Bangladesh, for example, and some of the other African countries, where they've very successfully launched an end-to-end insurance service on your mobile. So you don't need a smartphone even for this. So you can actually, and fair enough, they won't cover the entire spectrum of the health insurance possibilities of what you can cover in terms of the risks, but there'll be some basic risks that everyone wants to cover, and that would be covered, and also things like simple motor insurance policies, etc. So it's a great example of how the basic process of underwriting and claim settlement hasn't really changed, but you have used technology to sort of make that easier to reach a new customer base, or to provide services to an existing customer base in a more efficient manner. So I think that's and at the back end, digital transformation also means that you're getting rid of duplication and legacy systems, and making the systems that are dealing with large scale functions and processes in a much quicker manner. You've got data which is being stored in a hybrid manner. You can you're still using physical servers, but very much on the cloud, as long as security and privacy issues are safely dealt with. You've got telematics, which has come in to sort of make even the pricing and the risk modeling a much more efficient process. So telematics has been there for about 4 or 5 years, but now today you can buy a motor policy not just as a part of a general population based on which the price of a policy has been determined, but very, very customized and individualized to your driving patterns, how many times you brake, what sort of pin code you're living in, and that gives you a very, very specialized price point for your particular risk. So I think digital transformation has been the biggest, and it continues to be one of the biggest trends that you see. At the other end of the spectrum, what this has also meant is technology coming in and introducing a completely new industry paradigm in terms of fintech or insurtech, where you're looking at tech companies coming in and driving the process for a particular end-to-end business process for a particular bank or insurance company. And that has been very successful and actually coexisting with the traditional banks or insurance companies. So that doesn't mean that the brick and mortar sort of setup has shut down, but it definitely means that you've got fintech and insurtech as an industry that sort of coexists with the traditional market and continues to serve a segment which is kind of not completely not touched by the traditional market. So examples of Bima that I gave, one of the deals that I did was with Acorn. So this is where it's a good example of a traditional company which has sort of tried to stay ahead of the curve by investing in insurtech, which meant that they incubated their own insurtech venture. Acorn is the largest life and pensions provider in Europe, based out of Netherlands. And they had incubated their insurtech venture called Crudel. So they put in money and they said that let's look at insurtech. Let before someone else comes in and cuts into cannibalizes our market, let's get into that market ourselves. And that venture was basically Crudel was only focused on selling insurance through Facebook. So I'm going back 7-8 years now. So just selling insurance through Facebook to the segment that uses Facebook quite actively or uses social media quite actively. And the only risk they covered was basic motor insurance policy and basic health insurance. But they did have a huge reliance on telematics, on real time, sort of data being brought in and giving a single view of the customer, everything being on your smartwatch or on your app. And just therefore reaching a segment which is completely going to be comfortable with using technology to do their day-to-day activities. So I think and eventually, of course, Crudel was spun off and became its own entity, separate from Aecon. And Aecon is life and pensions, right? And this was very much a general insurance sort of risks that they were going into. But that's a great example of how a very big traditional 100-year-old insurance company was trying to sort of look at how it can stay ahead of the curve by getting into insurtech. And I think that's one of the biggest things, technology coming in and changing the face of traditional markets and disrupting the way that you would look at traditional processes and doing both front end and back end things. And of course, one of the biggest fallouts of this has been on customer experience. That's what's been driving everything. How do you make it easier? And clearly, that means competition wise as well. You need to stay ahead of the competition and try to retain your customers as much as try to get new customers. But how can you improve the customer experience? How can you attract new customers? How can you make sure that especially the ones like the 20s and 30s and 40s who are kind of tech savvy and have the money to spend, how are you trying to get them more and more into your service bracket, and to see how you can not just enhance their experience of buying services from you and experiencing services from you, but also to customize it to an extent that they feel that this is a service made only for me. And I think retail is way ahead. And within the financial services gamut, I think banking is probably 100 years ahead of insurance, really, in using technology to do this. And retail is much, much ahead when you think about retail, and healthcare is getting there in terms of their use of technology. But that, I think, is probably the biggest trend. I think some of the other pieces which kind of tie into this, the demographic and customer behavior has changed considerably. With social media, which is also a fallout of technology really coming in, our social behavioral patterns of buying have changed. So whether that's retail, whether that's financial services, whether that's availability of information, and also with regulations like GDPR, etc., coming in, our data and privacy of our data is sacrosanct. So how do you provide all these services without compromising, the data integrity of your customer has become paramount. So it's great that I go to the gym. I'm getting my medications from my chemist. I have reports with my doctor. I have an insurance company that provides health insurance for me. And I have put all of this onto one single app, which takes care, where I have a single view of all my data coming in, my health data, so that I at any time can view this, and anybody at any time can sort of have access to it when I consent to giving that access. That has meant that you have got real-time data coming from various sources, which needs to be protected and kept and then analyzed. So when you think about, on this example, when you think about an insurance company and you're trying to buy an insurance product for your healthcare, that insurance company, if it has access to how many times you go to the gym, what your eating habits have been, what your previous reports have been, they will be able to provide a much better insurance quote to you and a much better risk for you, rather than saying, let me just go and buy this all out cover from Bupa, or just get something from AXA or something. So that idea, which certainly in the UK, Vitality is a company that has really done that very, very well, because they give you they've gamified health insurance in UK, which has meant that if you go to the gym, say 3 times a day, you get a point, you get some points, so you can earn points, and for every good behavior, so to speak, because you become a better risk if you have good behavior. And you can get Apple watches at the end of this. You can get, so there are various ways in which the traditional paradigm of how you look at a risk, how you can improve that risk for yourself and for them, has changed. And similarly for financial services as well. Now I think it's such a connected world that even with financials, one of the deals that I did has meant that we sold a health insurance app to the customers of Santander, which is one of the biggest banks in the UK, retail banks. And the idea was that, if they consent, then they can give their um, the sort of the financial services activity can also be linked to their healthcare activity, which has meant that, payments for your insurance plans, which has meant payments to your chemist, payments to your gym, as an example. All of this is streamlined in one particular go, and you have a single customer view as an insurance company or as a bank. You know what is going on with your customer end to end, and equally for you as a customer, you have everything on one app that takes care of your needs end to end. So I think these are some of the change. I mean, I can go on and on technology and financial services, but these are some of the key trends that I have seen firsthand.
Looks like we have lost our host, have we?
Yes.
Maybe I'll pick up from where you left, Kadambari. And I think one of the things in the open banking is on the similar theme, where with the help of regulators, etc., but the whole thought process is that banks allow access to at least a part of their data. This could be through APIs and all of that, which sort of allows a third party to look at customer data and sort of assist. You refer to UK, right? So I think Yolt and MI and all of those companies are built on that model. Of course, this has to be with customer consent and all of that stuff. But broadly, it's sort of looking at sort of that open banking and say, okay, why should I be only tied to certain related stuff? How can I link these different providers, if you will, through the same ecosystem, right? So this could be even very simple, like regular budgeting, right? Having access to different or access to banking by different third parties could actually enable all of this, and especially in markets, countries, and geographies where budgeting or debt is a huge problem, right? That it can be also one provides the data, but also become predictive in model, right? Which says, hey, you are approaching now 70% of your overall budget, and you've just done only 50% of your month or that time period, right? So that is predictive and say, okay, now cut down on your spending, else you go into further debt and stuff like that, right? So yeah, I think this space is pretty exciting. The only thing that I will say is it means more headache.
So we've lost Rupesh.
Yeah, it seems.
No.
Rupesh, you there? It seems we lost him.
Mahendra ji, what is your background? Sorry, did you say that you had your own business?
No, so I'm a CFO in KB Exports Group.
Okay.
So we are into agriculture.
I see. Oh, that is again such an exciting area. I feel where technology is coming in. I mean, we talk about traditional industries, we always talk about retail, financial services, healthcare. But when you think about the primary sector, about the education, government, agriculture, and how technology is coming in
Absolutely.
there. So for my book, I had, I had done a bit of research, and one of the companies I worked for was ITC Infotech. So that was there. I worked in their tech arm. I was looking after business for them in the UK. But ITC as a group, because they have obviously they've done, their primary thing is in agriculture. It was wonderful. So one of the projects that we were, we sort of talked about, and I know we contributed to it, was how you would use drones to determine for their tobacco crops, if there is early blight and, all those diseases that are coming into the
So
plants.
luckily,
Using drones.
luckily in India now there are 2-3 companies which are doing really tremendous job in this particular sector. So right from your sowing to your field temperature, to your pesticide spray, to your field crop, to your production planning, to your irrigation. Everything is now coming up on technology. So 3 4 years ago, if someone asked me that what will be your tentative production, how will you be controlling it, how will be your irrigation system, everything was you have to calculate everything on Excel, and it was not that much
Mm.
accurate. But in today's scenario, the things are changing a lot. So
And do you think that, because when we were working on this project, I remember that the government had come up with, that whole how to use technology in agriculture, and there was this whole guideline, and there were
Yeah, I'm
similar
so
things that they
sorry to
wanted to do. How much has that impacted or that driven what you see in use of
that needs a
technology?
lot of push from the government, because still it is very
Mm.
at a basic level. Like organized players in this industry are using it. So for example, for us,
Mm.
within next 20 25 days, we'll be starting with our mango season. And this time
Mm.
we are coming up with a new project of using blockchain in entire supply chain. Yeah,
How 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 would
so
you
we
use
are using a
this?
partner.
Mm.
Basically,
Mm.
so we are an integrated company, right from crops. So we have our own farms, we have our own vehicles for transportation, we have our own cold storages. We are self-ITA, so basically we are directly dealing with the airlines for space booking. We have our office in UK and US both. So the entire distribution is through our own channels. So we want to digitalize everything using devices. So, for example, every vehicle which leaves our pack house will have a temperature sensor, uh, and till the time it reaches to the end customer, we can have all the data of the temperature. So we know that where this particular cold storage, or we can say the cold chain, is broken. We have all our farmers tagged now, so we know that which. So for example, you visit to a Tesco supermarket and you procure a particular box of Alfonso mango, you will have a sticker on that, and scanning that sticker, you get to know that this particular farmer in Gujarat have produced this mango.
Like this.
So
Wow.
this is what we are
Lovely.
trying to do now. Very interesting thing, but there is a long way to go.
No, I think because with agriculture and with regulatory compliance, regtech is these are industries that are coming up so well. I mean, not just in India. I think we see that India being an agrarian economy, anyways. You see so much of that. Blockchain, you just talked about that again. Such applications of blockchain just within these traditional industries. I mean, with financial services, I think we are much more familiar with how blockchain is being
Yeah,
used. But when you think about the application just on things like, fraud management, things like ledger maintenance, all of these which have been sort of brought in, I think there's some really exciting
absolutely.
stuff happening.
And Mahendra, sorry, I logged out earlier. I'm not sure what really happened. And Mahendra, it wasn't fair for you
Yeah.
to remind us of the mango season coming up. We suddenly got, or I at least got distracted from the panel to thinking about mangoes. So it was unfair of you to do that. But I
No,
think
like
the blockchain element that you bring up is very, 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 very interesting. Also in the healthcare, one of the stuff which a lot of
Yeah.
companies are doing, especially when they're doing vaccines and distributing in terms of producing in one country and distributing in multiple, there are some, of course, WHO guidelines, etc. So I see in this space, a lot of this blockchain is in terms of ensuring it's going in the right, it's not getting diverted to other places where it is not supposed to go and things like that. Temperature control is one of the aspects. So health is doing a lot of it in special WHO sponsored vaccination programs. They are using it quite extensively. So yeah, it's a very, very exciting space to be in.
absolutely. Absolutely. So one of the other thing which we would like to touch upon is basically the environmental and sustainability, like ESG compliances and responsibilities of the company. So I think all the MNCs have started it, but yeah, India as a market and the domestic companies also needs to take care of this. We as a company,
I agree.
Yeah.
we
No, I completely agree. I think in India, at least the conversations have
yeah,
started. In UK, we definitely have ESG is a very important part of just everything, even for services companies. So my last job, I was heading the entire P&L for insurance services in technology for DXC. And in one of the key things, not you don't like in your industry. I think Mahendra ji, it is very difficult it's very different because you can see very tangibly what the footprint is going to look
absolutely,
like, and ESG becomes very very
yeah,
tangible for you. For people like us, and I don't know, Rupesh ji can also contribute, but I feel that for me personally, when we don't think about ESG very, very, it's not in the forefront when we are thinking, oh, let's do this tech services outsourcing deal. But for everything, if I have to just go and do a meeting, you have to fly and there's a carbon footprint.
absolutely,
So even, something as mundane as trying to do a sales pitch will have a carbon footprint for
absolutely.
you. So how do you look at sizing a deal, and how do you look at the costs, and how do you look at giving uh, delivering services in a way where ESG is kept front and center? I think that is in the UK, certainly I've seen that is something which is coming up in literally every single thing that you're doing, every single small thing that you're doing, even for a services
Yeah.
company.
And if I could come in at this point, I think one of the things which almost world over, of course, at a different pace in different places, one of the stuff which is driven by through banks by the governments and regulators and all of that is your credit assessment policy. So one of the stuff we are talking about is ESG in that. So, for example, if there is a firm, domestic, international does not matter. But if tomorrow, if they want to go for a sort of a big, it's a working capital loan or any other credit line, this will be an element that they will be judged on. So a lot of companies which have a negative carbon credit or substantially negative carbon credit increasingly will find it difficult to get money or loans from banks or investment from investors. Yes, we are, I think, a few years ahead from that scenario, but that's where this is definitely going. I mean, while our weightage for ESG across banks is not substantially high, but it is getting higher and higher year on year. So, which means, Mahendra, you are right that today maybe a lot of companies are not focusing on it, but just like a lot of the regulations will force companies to do that, else they will go out of business very soon.
Regulation is one thing that so regulation is one thing that will force it, but again, as a stakeholders, as the business owners, it is it is everyone's responsibility to take care of this thing seriously.
I agree.
And absolutely, it will be a need on our.
Yeah, I agree. Samir.
Yeah.
So yes, the conversation took a really interesting turn here.
Well, we lost you in the middle, so we just
Yeah,
entertained
I'm really
ourselves with
sorry
the
about that.
conversation.
We just had a technical small glitch with the bandwidth.
No problem, but I hope the audience found it useful.
Yeah, no,
Unfortunately,
yeah.
we can't really see
Only
a
I
lot
was
of
out of the session. Yeah, audience
comments and
were all
chats.
fine.
Yeah, but I hope this is something which resonates with the audience and something that they are really looking.
Yeah, I assure you,
So,
you and audience were fine. Only I was out of the session. Yeah. So,
So we went to mango season to ESG to now back to the topic.
yeah. So, Mr. Rupesh, I had a doubt for you. Earlier, you mentioned AI in finance, right? So,
Yeah.
can you share your insights regarding the role of data analytics and AI in the revolutionizing credit assessment and risk management processes? And how does India Silicon Valley Bank leverage these technologies?
Sure. And again, I'll repeat the same thing that it's not about SVB alone. I think from an overall general banking perspective. And this is potentially a topic I can potentially spend a lot of time on, so I'll try and be reasonably brief. But I think one of the things which with data analytics or AI is doing. So, okay, let me step back here. Typically, in terms of a traditional credit assessment models would predominantly rely on the limited financial data or credit scores or income information, right? With data analytics and AI and all that power that goes behind with this is a lot of stuff banks are working on with different non-banking institutions as well is on predictive modeling, right? So this is predictive models to forecast borrowers, right? It could be either retail customers or even large corporate customers in terms of likelihood in their repayment history, likelihood their default, their delinquency rate, their employment stability, from an overall, whether it's debt income ratios or it could be even macroeconomic indicators. So this isn't about an individual or a company, but how that country or geography is dealing with, right? So there is a lot of this. And one of the things which we are seeing, again, maybe staying put on and not going into a lot of details, is real-time decision making, which you've seen especially for small ticket size loans, where you can go onto an app or a site and you can get a 50,000 rupee loan almost instantly, right? So there is a real-time decision making which is happening and which is a function of a lot of this substantial data analytics, which looks at your profile very, very quickly and be able to make that decision so that it doesn't go through the normal underwriting route, for example, right? Or this is an automated underwriting. Personalized, credit offers, right? I'm not talking just credit cards, but overall credit offers is something which is also a part of this, right? So if you really bring it down, it's predictive modeling, real-time decision making and personalized sort of offers, again, both to retail and also to mid, small, and even large corporate customers as well. Hopefully that answers your question.
Yeah, yes, definitely. Yes, thank you. So, Mr. Mahendra, can you share examples of successful financial strategies or initiatives implemented by your company to mitigate the risks and capitalize on market opportunities in a disruptive environment?
So again, we come from a very unorganized sector, and so agriculture, which we basically I am into right now, is a very unorganized sector. So we are trying to utilize as much as possible of the technology. As I said in my previous comments, that data analytics is something which we are using and day in day out now, which is making a lot of things easier for us. Like for example, right from air freight rates to or space planning to or supply chain management to our risk management strategies. Like for example, if I stick my discussion with only with regards to finance, then I would say that there are a lot of initiatives from the banking industry as well, like Citibank, yes, and ICICI. They are giving a lot of tools which are very handy and which are real time available on their portal. So there was a time you have to call a treasury and then you have to negotiate and you have to close the rates. The hedging and the long term hedging was a very painful process. But now with the change in time and with a lot of innovation in the banking industry, this is helping us a lot. For example, if even if I have to take a call for 1 year, 9 months down the line, I can take that call based just looking at the screen. So I don't have to call someone. Or I don't have to wait till I get a confirmation from the bank that this will be the scenario at that time. So technology is absolutely helping us, and these kind of processes we are setting up on day in day out in our processes which are helping us. Again, like for this season, as I told you, we are trying to build a blockchain solution. This will definitely help us and our customers to have the real time information, and that will increase the trust in their mind that yes, everything is fair, it is in black and white, and it cannot be altered. So a person sitting in Europe, and if he is getting a box of mangoes, then he knows that how that entire journey has spent. So right from the farm to fork, the entire process we are trying to digitalize. So these kind of innovations we are trying to adapt. And looking at our sector, these small steps will definitely help us to go long and go in a long way. Yeah.
Yeah, thank you, sir. So, Kadambari ma'am. Ma'am, in what ways can established businesses and financial institutes leverage the principles of disruption to foster innovation and stay competitive in today's rapidly evolving market?
Wow, so many words. Okay, so I think I touched on this earlier in an example that I've given. For the most part, if traditional industries, any traditional industry really, it doesn't look at technology and evolving business models as a threat. Rather, if they can, see how they can adapt to the changes, either their own business models and method of working, or perhaps look at investment. And I gave that example of Acorn and Crudel. So one of the best ways to do it is to see if it is possible to incubate those ideas. Most of these large industries have large players who have the money to be able to do it. Swiss Re, is the largest reinsurer in the world, and one of the initiatives that they have is to see if they can innovate, tech-based initiatives for developing countries using insure tech for developing countries, if that makes sense. So again, a project that we did this deal for with Swiss Re, which involved them piloting an entire so in Europe, healthcare is provided by the state. So all your reports, all your healthcare needs are sort of electronically maintained by the state. So what Srishti wanted to do was to see if you can bring in that model where you can look at the individual having control over those their healthcare records, their healthcare treatment plans, etc., rather than being with the state if they can have that in their reach. So the project was about making sure healthcare was available to every individual on their terms in Finland. So they piloted this in Finland, and they wanted to take this out. And what that has meant is that any country where healthcare is not provided, insurance is not provided by the state, if the technology can be made such that the individual has control, then the insurance companies, the prices that you pay for these services will also come down. So that's a great example of how a traditional industry is trying to embrace disruption in order to create something which would help the society at large. Then I gave this example of Acorn where you have a traditional business model, but you're trying to get a jump ahead by incubating an idea for an insurtech within your remit, and then spinning it off as an insurtech company in its own right. Then there are, of course, other ways in which you can sort of, and that we are seeing, innovating on existing models, existing processes, and whether you're using AI, you're using analytics. I mean, we have been using this in services for a few years now, where we're looking at robotics, we're looking at AI, we're looking at telematics. RPA has come in a big way to sort of look at. So traditionally, claims were pretty much manual. The time to settle a claim was much longer. You put in RPA, you can, the entire claims process, and it's not just about automating the claims process, but it's also about the decision making. It's also about the overall how that data feeds back into the back end, into the policies, how this is impacting your own costs of providing and delivering that service in a more efficient manner. Entire thing has been now under robotic process automation, and that has meant, and also the cost of actually doing this using RPA is next to nothing. In fact, UiPath actually gives you this for free to sort of implement. They will only come in at the time of sort of if you want to put in that solution in place, and then maybe look at things that you want to do around it for your existing legacy systems. So that's a very different story. But if just the idea of using RPA for claims is actually given away for free by one of the solution providers, so it's become next to nothing to try and implement this, which is going to overall impact your TCO, total cost of operations, to come down. So this, I think these are some of the ways in which, positive disruption using technology has been embraced, certainly in the financial services industry. And there are several more examples. I mean, when you go to, you have new business models which have come up based on our social behavioral changes that have happened. So you have, a Justin Bieber can release his song on YouTube before he became Justin Bieber. He used to sing on YouTube. He got discovered. Now he's a globally successful artist with millions of dollars of contract with him. Now, what that has meant is that this whole traditional model of having an agent trying to, do the rounds of big music companies trying to sell your art has no longer it. Social media has removed that altogether. If you have talent, you are able to reach your audience very, very quickly at zero cost and become successful. One of the most successful bloggers or vloggers rather is PewDiePie. He has about 50 million followers on YouTube, and all he does is tell jokes. So it's in jackass type jokes. I mean, it's not even quality stand up or anything like that. But he has a Disney contract worth, a couple of millions of dollars just because he has a successful number of followers. And that's not even art. That's not even like a talent. That's just telling jokes. But you're successful because you're popular. So the business models have changed because today we have lower attention spans. We want everything done quickly. So it's not traditional way of looking at not just financial services or retail. These are very, very hardcore traditional industries, but even emerging, industries like like bloggers, like using social media, for example. These have been trying to, so the limited point I'm trying to make is it's not just, I think, reaching your customer and being able to provide services is not just limited to traditional ways anymore. There are a lot more avenues for you, but particularly digital media and social media, which have now come into play to make these things more cost effective and quicker and more efficient in terms of being able to sell and deliver your products and reach your customer. That's my point.
Rupesh, your voice. You are not audible. No, not
No, we can't hear you, sir.
Rupesh, can you hear us? Maybe you can reboot. Just log out and log back in again.
I'm just trying from my end too. Just a minute.
In the meanwhile, Mahendra, did you also have a comment on this?
Not really, but yeah, absolutely. What you are saying is absolutely correct. That the availability of resources and availability of digital platforms has really made the things completely different. We can see a lot of not just the bloggers. There, we can see on daily there are so many reels. There are so many people who has been successful. People are able to basically justify and they can showcase their art publicly without any investment. So it is making the things really easily available. You can say.
Rupesh, sir, is everything all right?
Yes.
Am I audible now?
That's right. Yeah.
Yes,
Yes.
I think technology is giving us a lot of grief today. Kadambari, I just want to come back to your RPA point, and one of the things, and this is maybe more for my benefit, I've not seen RPA being immensely successful in the banking sector. I mean, I've been involved with a few institutions, both on the bank side and in terms of deploying this solution. And I think a lot of the banks struggle with it. So I just wanted to sort of pick up this point that in the insurance sector, you've seen this being massively successful. Is that right?
Yeah. I mean, it is now, I have seen it evolve over the last, 7 to 8 years. And I certainly speak for UK and Europe markets. India, I'm not, I think it's still sort of very nascent in any way in terms of the use of technology in insurance. But yeah, and I remember, for example, one of the first, when RPA started coming, when these new sort of technologies started coming in, RSA in the UK, they had made an investment in creating this team within the claims department, which would only focus on doing pilots on using RPA for claims. So it was that sort of focus that they were looking at how RPA can come into. And the same is the case with telematics. About 10 years ago, I think I did my first pilot, and at that time, and this was AXA making that investment, and there it was in underwriting, and they wanted to see at that time, even in UK, I don't think they were really manufacturing those dongles which can be put in. I don't know if in India we have that yet, but at that time it was like, just you insert a dongle and real time data on how many times you're braking, what the torque is, and all that data is transferred to the cloud through that dongle. They were not getting manufactured in UK. So they actually, AXA had made the investment to get these from Israel and use the tech companies here to be able to use that data to create the analytical sort of layer on top in order to make it feed that data back into their risk models to calculate the pricing and premium. This was AXA 10 years ago, and I know, and this is very nascent. Today we have driverless cars, and the issue we are grappling with is how do we create an insurance policy for a driverless car? Where is the liability lie to begin with? There is, the individual is not, and is it the car company? Is it the technology? Is it who has? So just on these two examples, I think RPA has been tremendous. Now RPA non-life is almost every other big company, insurance company in the UK definitely has some form. We've got 3 AA, UiPath,
Automation Anywhere,
and that's AA, UiPath, and
Blue Prism, IBM one.
So, yeah, the IBM one, and they are massively there. I mean, it's a very it's a taken for granted kind of a thing that you will do, that you will definitely consider this. And like I said, the cost of implementing some of these has been, it's really come down.
That's
So
interesting,
today,
because I mean, all large banks across the globe are using RPA, but in our sort of, in terms of our initial business plan, if we expected, for example, just throwing a number, about 80% improvement uh, by virtue of either risk reduction or cost elimination or speeding up go to market or whatever it is, we're not seeing more than 25% on an average across the banks. And I'm wondering why that is a variation, but maybe that's a side conversation we can have. Just on
yeah, I think my limited point on just my limited answer on that will be with insurance and RPA, there is a very defined use case. So RPA is in claims. RPA can have other applications, of course, but RPA in claims is a very well defined business case, which is, and therefore I think it's successful. And it has seen the kind of proliferation it has.
All right, perfect. And I think one of the stuff both of you were talking when I got locked out was around some of the new age stuff. And I'll give you an example on NFT bits, right? So one of the very big CEOs of a large corporation, we were having a sort of a small gathering in the Bay Area, and we were talking about it. This person has purchased some very expensive art on NFT. So the difference is, historically, if somebody purchases an expensive art, and some of this is to show off, is to invite a group of people to their home, right? And sort of organize a dinner and show the art. But this person could now just flip out his phone, show that they have purchased a multi-million-dollar art on the phone. And since this is exclusive, this isn't a picture, so that is the another use case which is coming in terms of where people are using it to say, okay, I bought expensive stuff, but it doesn't remain within the confines of my home or whatever, and I can sort of carry it in my phone or device and show it across the world. Just just an example, and I was mind blown by the whole thought process behind this. So it's not just the art, it's the NFT of the art, right? Which gives you exclusive right.
Absolutely.
Yes, sir. So with this, our session comes to an end, and I think it is safe to say that more than the audience, the speakers have enjoyed today. Yes, sir. It's a lovely talking every one of you. It's very informative. Hope to work with you in future again.
Sure.
Yeah, thank you very much. And Kadambari,
Thank you very much.
it was
Thank you, ma'am.
lovely to
Thank
speak
you,
to you.
Rupesh sir. Thank you, Mahendra sir.
Rupesh, it was a pleasure meeting you.
Absolutely. Thank you. It was wonderful meeting you, Rupesh and Mahendra ji.
It was a
Thank you.
pleasure. Yeah, let's catch up offline as well.
Absolutely. Let's find each other on
Let's
LinkedIn.
do that. All right. Take care. Have a great weekend.
Thank you.
Bye.
Have a
Thank
great
you so
weekend.
much.
Thank you.
Thank you.